Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the breaking news on this Thursday morning on initial jobless claims. And, of course, these are for the week ending January 3rd, so there are potential seasonality issues here. 208,000, that's a bit below estimates. Last week's 199 pops back over 200,000. Suffice it to say, these are really well-behaved initial jobless claims. On the continuing side, always a week in arrears. These are the week ending December 27th. So once again, there are seasonal issues here. 1,914,000, very close to estimates. Last week, well, we remained under 1.9 million. The 1,866,000 becomes 1,858,000. Also well-behaved as we dabble between being above and below 1.9 million. Let's look at productivity, shall we? The secret salve of the U.S. economy, what Greenspan called the special sauce. Well, this is the third quarter preliminary. There will be changes. 4.9%. Extremely close to estimates and a really solid number. In the rearview mirror, 3.3 becomes 4.1 for the last quarter's final. So 4.9, wow, you have to go a long way back to find a higher number. We have to go all the way back to the third quarter of 2020. Productivity's great. And if we look at unit labor costs come in, well, 1.9, down 1.9. That's a minus sign. They are lower. Unit labor costs are lower. That's always good news. And in the rearview mirror, the 1% to the upside becomes minus 2.9 to the downside as costs drop. And finally, on the trade balance, which we know is going to be a deficit, we're expecting a number around $58 billion. Buckle up. This is unreal, the movement in this number. Minus $29.4 billion. We cut it basically in half. We cut it in half. Just consider this. In March, it was $136 billion. Right now, it's a whisker under $30 billion. We haven't been that small in a long time. I don't have enough records here to go back that far, but you're going back a ways. And here's the news on why it moved lower. Imports were down and exports were up. Well, normally I'd say that's a good thing because let's make our own widgets and export them and keep our own production within the country, which would mean potentially lower imports, which is part of the strategy of this administration. However, there's also the possibility, you could look at it, that imports are down because demand is down. So we'll have to really scrutinize this carefully. If you look at interest rates, we're basically unchanged in a 2-year. We're at 16 in a 10-year. That's up 1 basis point. And boy, interest rates, especially on the long end, they've been stubborn and they've been in really tight ranges. Joe, back to you.